Good morning. I'm Paul Hamm, CEO of Endavo Media. Endavo Media is basically an internet TV platform. We're a total video business solution that supports the commercial delivery of online video, mobile video, IPTV, and social media services. Our entire end-to-end solution is packaged as a platform as a service model. We target primarily video content-driven businesses and network service providers. This is a very large space of over 200,000 companies in the U.S., generating over $500 billion in video production and distribution business. As Pete put it very well for us, broadband internet has changed dramatically the way we get consumer entertainment and information in the blink of an eye. Fact is, people are starting to spend less time on their television and spend more time on their broadband PCs, on their mobile devices, and other devices watching video. And it's not just the younger generations. And so broadcasters, advertisers, traditional media is having to adapt to new ways to reach consumers or risk getting left behind. Content providers actually have new opportunities as well as a challenge to reach consumers directly through the internet as opposed to as an alternative to traditional media. Brian Roberts, the CEO of Comcast, calls this the cable bypass. Fact is, the money is now following. What's driving this? In just the last 2.5 years, video consumption has more than tripled. It's very fast paced. Now, online video advertising is expected to grow 3 or 4 times in the next few years, and paid online content also expected to triple in the same period. And we see certain industries already beginning to take advantage of this massive opportunity. Sports broadcasters and producers, faith, live events, TV content production, even telco and broadcasters represent over 100,000 companies generating over $250 billion in business and spent just in the last year about $2 billion in online distribution. And for us, the low-hanging fruit, and thus our focus, is the small to medium-sized companies, which represent about half the companies in these industries. And this is why we're relevant to them. This is a clunky slide on purpose. The infrastructure required to pull multiple forms of content from multiple sources in order to deliver commercial video services over multiple types of devices from multiple networks and actually make it manageable and make money with it is a significant challenge. Most small to medium-sized businesses, as well as many large companies, simply do not have the time and resources to build or buy this, to do it all themselves. And this is effectively where Endavo Media comes in. We have effectively solved this problem by eliminating the need for big infrastructure, by providing a pay-as-you-grow model, and by making it quick to implement and easy to manage IP-based video services over multiple screens. To drill down on that idea just a little bit, very simply put, Endavo Media's platform helps content providers simply do more and make more with their audience, brand, and content. In one single platform as a service, our platform enables more content in, meaning we handle live events, linear channels, video on demand, audio, pictures. More content out, allowing distribution to the 3 screens, to social video, to affiliates and syndication. More ways to monetize, including advertising, subscriptions, sponsorship, pay-per-view live, syndication, and more social media to allow our customers to extend their reach and engage with their customers. And underneath all of that, we provide a roll-up-your-sleeve support organization, all of this at a less cost relative to other alternatives. As a matter of fact, if you put on one axis all the custom services and capabilities that's required to deliver these types of services, and then the total cost of ownership, and put Endavo Media up against trying to do it yourself using free portals like YouTube or open source, or even looking at other platforms in the business, Endavo Media usually stacks up as the best value. Our go-to-market strategy is primarily driven by an internal sales team and social media marketing, which is already proving successful. And we also actively engage with selling partners, and we just signed our first major network partner in the UAE, Etisalat. Our business model generates mostly recurring platform service revenue under contract with our clients. As a platform as a service model, we maintain high margins, and we also are able to keep our burn rate very low as we grow our revenue. So as a result, we expect to go cash flow positive sometime in Q2 or Q3 of next year. Progress so far: we launched in 2006. We have about 25 employees in a few offices. We're growing very carefully. We've served about 75 different clients We did about $500,000 in revenue in 2008. We're on track for around $1.5 million in 2009. We expect that growth trend to be able to continue for a while. And we just signed as I mentioned, our first major licensing client with a significant telco internationally, Etisalat. That contract alone brings us about $1 million a year minimum. In terms of new capital, we're expecting to initiate our Series C round in the next couple months for $3 million. We use those funds for accelerating sales and marketing. We'll also expand our support services team and continue to develop our technology. So this is an acceleration round. And with that, we think we can get to $20 million run rate sometime before 2012 or sooner. A few more investment considerations. We have an excellent management team that's in execution mode now. We also have some very valuable investors and advisors on board, including Mark Johnson, formerly with CheckFree, Lynn Biesing, also with CheckFree and with Extreme Software, which was purchased by HP last year. We're a real company with a growing revenue base, and we're actively selling and successfully selling into multiple vertical markets with lots of room to grow. We just signed a major telco deal, as I mentioned, bringing in at least $1 million a year in contract revenue, and will be positive cash flow by mid-2010. We think this puts us in excellent position as a company in the online media space that's imminent for consolidation in the next 3 to 5 years. Thank you very much. I hope to talk to some of you during the course of the day and after the conference.